welcome. You're watching Your Money Matters here at NDTV Profit. I'm Mahima Vajrajani, and today we're going to talk about two things. First one, in fact, three things. Firstly, we're going to touch upon motor insurance or two-wheeler, four-wheeler insurance, as we call it, as to what one should keep in mind before going for these insurance. How important are these, and what are the aspects that one needs to keep in mind? The second thing that we're going to talk about is something that's been trending a lot on Google Trends. That is, everybody is going ahead and searching for Indian rupee versus the dollar, because we've seen Indian rupee depreciating to new levels of lows every day, and people want to know as to what's happening there. So we're going to talk about that as well. And lastly, we are going to talk about how, considering the crude prices are rising today, this second day in a row we have seen hike in terms of petrol and diesel prices. So how should you plan your transportation? So rent versus commute, how are you going to do that? That's everything that we're going to talk about in this show of Your Money Matters. Now, to kickstart things, and to talk about motor insurance, we're joined by Venkatesh Naidu, who's the CEO of Bajaj Capital Insurance Broking, joining us now. Venkatesh, thank you so much, first of all, for taking out the time. My first question is very basic to you. If somebody is going ahead and getting an insurance for their vehicles, what are the non-negotiable things that they should definitely look out for?
Wow, that's a difficult question for the beginning, Mahima. But thank you for bringing me up on the show. Buying a motor insurance, as you know, is a very, very simple yet complex topic, right? Today, the entire temptation is, do you choose the cheapest insurance, or do you choose an insurance that is valuable for your situation, for your motor, right? So something that is absolutely non-negotiable, Mahima, is you choose your insurance based on your vehicle, your location, your need, okay, and your context, right? And that's something that's very, very important. What do I mean by it? Okay? So typically, if you look at motor insurance, you can buy something which is a very, very base cover. Okay, today, what is mandated by the government is that if it's any car, you have a OD cover or a TP cover. A TP cover is mandatory as governed by law. Okay. But what a TP cover offers you is that it protects others from you. Means if you go out and have an accident and if you affected somebody, it protects that person from you. Okay, what an OD does for you, an own damage cover, is that it protects your asset, your car, right? So something that is absolutely non-negotiable is OD plus TP, because even today, out of 60% cars that are covered in the country, about 40% in absolute terms are the only ones which has OD and TP cover. 20% of the cars have only TP cover, and 40% has no cover at all. So an OD plus TP is an absolute non-negotiable to begin with, Mahima.
Okay. So when we talk about third-party insurance, right? These days, when we take a look at third-party versus a comprehensive insurance, comprehensive policies are kind of becoming more popular despite of their high premiums, right? So what exactly does third-party cover that, or comprehensive policies cover that third-party doesn't, or vice versa? How does one compare the two?
So comprehensive, like I told you, covers everything. It covers everything from the damage to your car, okay, to if you cause an accident, the liability, the cover, the money that you need to pay to the person who you have caused the accident. Comprehensive covers everything. If you take a third party only, it only covers the person you caused an accident to. So in case your entire car gets destroyed completely, that is not covered under the third party. Okay? So that is called the own damage cover, and OD plus a TP is a comprehensive cover, where it covers your car, your asset, and the person where you caused an accident, if at all.
Got it. Okay. So the other aspect is with regards to zero depreciation. Do you think it's worth having zero depreciation in your policy, and how does it help?
So again, a very, very commonly, ignored proposition. Okay, most people today, like I said, are very, very price sensitive. They look at the lowest price insurance versus insurance that offers them value. Okay, and what's with all the online applications that are available, people make quick decisions, ill-informed, right? A zero dep helps you where typically if there's a wear and tear in your car, you buy a new car and it's say 2 years old. After 2 years, all your parts go through a wear and tear. If you do not have a zero dep cover, that depreciated value is what is refunded by the insurer when you take it to a garage. You take your car to a garage and let's say some parts of your car is damaged. If you do not have a zero dep cover, the level of depreciation that part has gone through, that is deducted by the insurer. Typically, it is about 20% every year. However, if you have a zero dep cover, then the actual value of that particular part is reimbursed by the insurer completely. So the difference between buying a zero dep or not buying a zero dep is about 8 to 10% of pricing. So today you may choose to save 8 to 10%, but tomorrow if something happens to your car, the value of that particular part or asset in the car will be far more expensive compared to the 10% that you will incur today as premium. So I would encourage everybody to go to have a zero dep as a minimum aspect in their car insurance policy.
Okay, all right. The other aspect is with regards to no claim bonus, right? First of all, of course, it's very important for everybody to drive safely in order to, have that no claim bonus. But how do you kind of put this into perspective and the ways to kind of protect no claim bonus as well?
So no claim bonus, very simply put, is that you don't claim means you get rewarded for the fact that you're not claimed. Okay. Right. Typically, every year you may get a discount of about 20% in your premium. It can even go up to 50% in certain insurers, right? If you have not gone ahead and claimed. Now, typically, what people do is that they go ahead and claim for every small accident, right? You may just go ahead and scratch your car, but you take it to a garage, and the garage person will go ahead and inform you that why don't you claim insurance. You may end up paying 4,000 rupees to address that scratch, but in the next year, you may end up losing an NCB of 10,000 rupees, 12,000 rupees. So my suggestion to everybody would be that if there are very small damages, and if you can fund it from your own out-of-pocket expense, then go ahead and do that so you can claim on your no-claim bonus and ensure that you get that discount every year when you go ahead and renew your policy.
Okay. Okay, got it. And how do you look at cashless claim versus reimbursement claims? What is better?
Cashless all through. Okay, cashless is the absolute convenience. Go through all the network garages. You get the best seamless experience. The insurer will deal with the garage directly. Go ahead and make all the payments. You're not subject to the nuisance of making the payment, raising the reimbursement, and claiming a bill. However, in case of emergency situations where you've gone ahead and had an accident and you have no way to reach your network garage, okay, which is improbable in these days. But even if there is a situation like that, you may always go ahead for a reimbursement claim. You'll have to go through a certain process. Okay, there is reasonable time for claim of, intimation of claim. You'll have to do that to the insurer. There's reasonable time for claiming the reimbursement. You'll have to do that. Follow the process and you will get your claim. But cashless is the best methodology that you can adapt to. Especially in a situation where network garages now have grown across the country.
Okay. Venkatesh, what are the common reasons generally because of which your motor insurance gets rejected? If you can throw some light on that.
Well, exclusions is the biggest aspect, right? Like I said, you can either take a comprehensive insurance with all add-ons, or you can do the cheapest insurance with no add-ons, right? Today, customers are not fully aware of what they're buying because they don't receive the right guidance. Okay. Right. For example, let's take this example that somebody may go ahead, in the floods of Gurgaon. I belong to Gurgaon, so I'll talk about Gurgaon for a moment. And you go ahead and water enters your car, your engine seizes. Okay, and you go ahead and, give your car out to the garage, and the garage will say, hey, you know what? The engine cover has not been covered in your policy. The obvious reaction of the customer is going to be, hey, is an engine part of the car? Isn't it covered? Yeah. No, the engine cover is an inclusion. Okay, so if you go ahead and do not add that add-on, then exclusion is something that will happen and you will not, get the biggest claim where engine is, a significant part of the cost of a car, right? So the first thing that you need to be very careful about is exclusions. Look at exclusions. Don't look at the cheapest price. Look at the price married with exclusions and look at be fully aware before buying the car insurance. These are the aspects that are going to be excluded from my claim. And if those are exclusions that you don't want to live without, then go ahead and ensure that you get those add-ons before buying your policy. Okay, that is a common mistake that everybody makes. So please look at your exclusions before buying your car insurance policy.
Got it. Venkatesh, a lot of times insurance for the same car differs, right? It depends on the person who is buying the insurance. So what are the factors that generally these insurance companies take into consideration that one should keep in mind before going ahead and buying a vehicle insurance?
I'll give you the most common factor that happens, Mahima, is IDV, right? Insured Declared Value. Okay. So typically what happens is that for every car, every make and model, and based on the age of the car, insurers define for every car model make a particular IDV, Insured Declared Value. Okay. Now that's a range. Okay. So what insurers or providers do is that they go ahead and provide the least price at the least IDV. So you may have a Honda Activa, a Honda car, which is 5 years old, and they might give you an IDV ranging between 8 lakhs to 7 lakhs. To go ahead and save on premiums, you may choose 7 lakhs. Okay. So if you choose 7 lakhs, lesser the IDV that you choose, lesser the premium. But the ill effect of it is that tomorrow if something were to happen to the car, say a total loss, then you will get the IDV that is chosen, okay, along with an RTI cover, okay, return to invoice cover. IDV that is chosen rather than the IDV that the car deserves. Okay, so IDV is the biggest factor. Apart from that, the underwriting factors of the insurer different insurers have different underwriting guidelines. They may, differ the pricing based on location, based on their experience, etc., based on the model, make, etc., right? But IDV is the most common aspect against which the prices differ. Okay, so people need to be careful about choosing the right IDV rather than the least IDV.
Okay, got it. With regards to EV insurance and a regular car insurance, what differences should one keep in mind, first of all? Because generally for EV, I think the higher cost will be on account of battery replacement, right? So what are the things that one should keep in mind while doing an insurance for EV specifically, and how does that differ from a regular one?
Well, Mahima, first of all, let me tell you, EV is an evolving space, right? Clients are learning, manufacturers are learning, insurers are learning, right? So that's something that I would like to keep as a caveat before starting this. The biggest thing in an EV, it's obvious, is the battery on which the car runs, right? That's the most valuable part of a EV. Okay, something that is additional, and obvious for every EV is the battery replacement cover. Okay, that is something that is there as part of the EV part. So whenever you're buying an insurance, you need to be very careful that you're buying a battery replacement cover, whether it's an add-on or whether it's a built-in into the policy. If you ignore that, that is something that can be extremely, hazardous if ever you have an accident. That can really cost your pocket. Okay, so battery replacement is the biggest, replacement, apart from a few other aspects that are there as part of the EV.
Okay. The other aspect is that if you've taken your insurance once and if you modify it, then how do things work? Do you have to modify your insurance as well? Do you have to inform your insurance companies? How do things work?
If you've taken an insurance during the policy year, most insurers do not allow modification.
Okay.
However, at the stage of renewal, you can go ahead and add or deduct in terms of exclusions and inclusions. That is something that all or most insurers allow. Okay. So when you're taking the policy itself, when you're choosing your add-ons or removing the add-ons, that is something that automatically goes ahead and gets relayed to the insurer, right? So at the renewal stage is when this happens. During the policy years, most of the insurers do not allow any modification in the insurance policy.
Okay. And how does the subscription model work, Venkatesh? Do you think it's worth taking the subscription model, pay as you drive? That's how they call it, right? Pay per use, I think.
That's again an evolving concept. Something that is very, very obvious and popular. The States, for example, is not there in India yet. If you ask me, In India, it can be a very, very personal opinion. I think pay-as-you-go model, pay-per-use model is not a very popular thing. You should refrain from doing that if you can afford a full-blown car insurance.
Okay. Just one last question. When you're renewing your insurance, are there specific things that you need to keep in mind?
Yes. If you're renewing your insurance, wake up. Okay, based on this particular news, article, the thinking, go ahead and evaluate your insurance, review your policy, and see if you have the necessary add-ons or not. There's no point crying over spilled milk. Look at your policy very keenly. Don't look at only price. Of course, look at price. Be price sensitive. Look at the most competitive offering. But please look at add-ons. Okay, zero dep, mandatory. Return to invoice, mandatory. Engine cover, mandatory. Deductibles, preferred, mandatory according to me, but you may choose to opt for it or not opt for it, right? These are aspects that you must add on to your car insurance immediately if you're not already added it. So please do that. Review your policy very strongly.
Fair. Venkatesh, thank you so much for taking out the time and, helping us understand this entire aspect of motor insurance. Though it's very wide, but we try to cover everything and you helped us cover that very wisely. Thank you so much, Venkatesh, for taking out the time.
Thank you, Mahima.